To cater for our international audiences, good morning and good afternoon. Welcome to our H1 2021 results presentation, and very importantly to me, a group strategic update, which I believe you will enjoy and in fact hopefully find class leading. I'll be assisted by Richard Stewart, our Chief Operating Officer, who will provide operating results, an update for the quarter and for the first half of 2021. And then Charles Cater, our CFO, will provide the financial results for the same period. Post the presentation, there will be a Q&A session where you will have full access to the corporate executive. And for those of you who may be wondering what is Johnny 5, and obviously those of you that have visited our operations in Montana will know that Johnny 5 is a robotic arm that is part of our world-class recycling business, which we will be talking more about later. So let me get on with the highlights of the presentation, but of course our safe harbor statement I'd ask you to take note of. Starting with people, and people are clearly the most important asset in our business, and their safety and health, I should say, of our people and workforce is absolutely the first priority. We did see a regression in safety, and Richard will talk you through that in more detail, but I'm very pleased to say that we've re-energized our safety strategies, implemented new strategies, and we've actually already seen a reversal in this regression. So I hope that continues. We've made very good progress with the COVID-19 vaccination rollout. We've vaccinated more than 40,000 of our employees, and we look forward to extending that to a significant number more, and of course in conjunction with the Department of Health rolling that out into our communities as well. Another highlight, and I will talk more about this in the strategic update, but we have now taken our ESG focus areas and developed them into a comprehensive sustainable strategy. And in fact, that sustainability strategy drives the entire corporation strategy, and you'll see that unfolding in the strategic update section. At the last presentation, we did make a commitment to achieving net carbon zero by 2040, and internally by a significant amount earlier than that. I'm very pleased to say we've made good progress on that. Obviously, it's progress on strategy and planning, and it revolves mainly around renewable energy projects, and that is another area that I will focus on because it is critically important. Operational excellence, you would have seen from the releases earlier today that we've delivered record financial results. That's off a solid operating base, especially within our South African PGM segment, which delivered exceptional results. And other than the safety stoppages which hindered our delivery in the US and to some extent in South African gold, they also delivered positive results. As I said, we delivered exceptional and actually record results from a financial point of view. Our adjusted EBITDA was 40.5 billion or $2.8 billion US for the first half of the year, and we also generated a record adjusted free cash flow of 17.3 billion rand and $1.19 billion. Great results. Disciplined capital allocation. We shared with you some time back our capital allocation framework. I think you've seen significant commitment to that framework. The key areas where we have adhered to that framework without any variation is we redeemed our 2022 bonds that happened post this in August, post the H1 cutoff date, but that was in August of 2021. We have declared an interim dividend of 292 South African cents per share, or 77.21 US cents per ADR, resulting in a just under 10% dividend yield. And that was declared at 35% of our normalized earnings, which is at the top of our share dividend policy. We've implemented a 5% share buyback, of which we've bought back 1.92%, or around 3.4 billion rands worth of shares. In share numbers, that's 56.6 million shares. And of course, Morgan Stanley is mandated to complete that process as announced. Despite all these commitments and returns back to shareholders, we have a robust balance sheet position with a net cash position of 10.2 billion rand, or $702 million. In terms of the precious metals markets, we're not going to spend a lot of time on this today. We will spend more time on this at our investor days in September. But suffice to say, strong long-term PGM fundamentals remain. There is some short-term volatility due to things like chip shortages and so on. In our view, the gold market is stable. Very importantly, again, there's been many requests for us to expand on our battery metal strategy. Of course, within the limits of not revealing our competitive position, we will do that today. But you have seen within this period 2 steps in terms of the acquisition of the Calibre lithium hydroxide project and the Sandouville nickel facility, which are strategic acquisitions in terms of positioning us in the European battery electric vehicle sector. We have also done more work on what we call our green metal strategy, and I will share more of that with you later on in the presentation, but that really is complementing the battery metal strategy. So let's just talk a little bit about the history, diversification, and the growth that has underpinned our record earnings and cash flow. The graph that you see up now has the history of how we've grown our PGM exposure, both in South Africa and the US, and as you can see from that, the very significant and material contribution made by the South African PGM sector. Gold is reasonably stable, and the US continues with its build-up. You can also see from that how the deleveraging of the company has happened, and in fact, on a net cash to EBITDA metric, we've doubled that ratio from 0.06 last year to 0.14 this year. So very nice trajectory, and very pleasing to see the diversification strategy creating such value. From a production percentage point of view, couple of key points to note. This is the pie chart on the right is production in ounces, not in value. You can see the very significant number of ounces again out of the South African PGM sector. Important to note on this graph, and for the first time, we are segmenting the recycling business as a business unit, and I'll talk more about that a bit later on in the presentation. But we will be providing in future more data around the recycling business as we grow it. But you can see 17% of our ounces come out of recycling, very, very significant. So I do believe that our investment and moving from a single commodity to a multi-commodity business has been very, very successful and something we are very pleased with. With that very brief introduction, I am now going to hand over to Richard to do the operational update and results, and post that Richard will hand over to Charles to do the financial results. Thank you, Richard.
Thank you very much, Neil. Good afternoon, ladies and gentlemen, and good morning to US colleagues. I think it's a real pleasure to be able to present to you today an update of our operational performance for the first half of 2021. As is customary at Sibanye-Stillwater, we start all of our engagements with a safety moment. It is disappointing that during the first half of this year, we have seen a continued regression in our safety statistics. A trend that started after the COVID lockdown impacts we experienced last year, and our deepest condolences go to the friends and families of 8 of our colleagues who we have lost during 2021. We have a safety strategy that has proven its success in the past. It is underpinned by a cultural transformation program, a program that drives the culture of values-based decision-making and is complemented by real risk reduction initiatives. Following the continued safety regression that we experienced into 2021, in June, we rolled out our Rules of Life campaign, a campaign that targets addressing high-risk behaviors through a zero-tolerance approach. This initiative underpins our zero-harm safety strategy, a strategy that includes the pillars of empowered people, an enabling environment, and fit-for-purpose systems. It is extremely pleasing that we've seen a significant improvement in all of our safety statistics across the board since we rolled out this initiative and during the third quarter to date. Our South African PGM operations have delivered a stellar performance over the last 6 months. Compared to the same period last year, we've seen a 42% increase in production at just under 900,000 ounces. Equally pleasing is that we've managed our costs well and seen a 10% reduction year on year in our all-in sustaining cost, maintaining it at below 17,000 Rand per 4E ounce. This production delivery, combined with a 60% higher 4E PGM basket price, led to 14 billion Rands worth of free cash flow generated from these operations during the first 6 months, or equating to a 66% adjusted EBITDA margin. Equally pleasing is the successful integration of the Marikana operations, where we have managed to retain costs and reduce them, in fact, by 13% over the last 2 years, despite a reduction in volume output and despite 2 years' worth of inflation. We have now truly embedded the synergies that were realized through this transaction. We have also realized value from the spare capacity we had at our processing facilities, and during the last 6 months have processed an increased 35,000 ounces of third-party material through these facilities. Our Stillwater operations were on track to deliver a record 6 months performance. Unfortunately, however, due to a tragic safety incident at Stillwater West that resulted in a 21-day safety shutdown, our output for the first half ended up being flat year on year. The ongoing effect of this unfortunate incident will continue to impact the Stillwater operations for the remainder of this year. Pleasingly, however, the continued ramp-up of the Blitz project has exceeded plan for the year and will partially offset this temporary negative impact at Stillwater West. As a result of the reduced production, and combined with a 24% increase in our 2E basket price that impacts royalties and taxes payable, we have seen our all-in sustaining costs at this operation increase by 12% to $973 per ounce. Despite these operational disruptions, however, the underground operation still delivered an adjusted EBITDA of $437 million for the first 6 months of this year, or the equivalent of a 65% EBITDA margin just on the underground operations. Stillwater also hosts one of the largest recycling facilities globally, and during the last 6 months, the output from this facility has delivered just over 400,000 ounces. That in turn has resulted in a $50 million adjusted EBITDA from our recycling operations, which when combined with a $12 million net interest income that was derived from short-term advances to our recycling customers, produces an EBITDA margin of 5%. Considering that our working capital is turned roughly 4 times a year or once a quarter, that 5% equates to a 20% return on that working capital investment. I dare say that this recycling business, besides for being just a low-risk business with very attractive returns, recycling is also an absolutely critical part of the demand and supply balance globally. Our recycled ounces have a significantly lower emission and waste footprint, and therefore this green fingerprint is highly complementary to our primary production base and forms a solid base for future growth in this area. Our South African gold operations delivered a steady and solid performance, and compared to the same period last year that was disrupted by COVID, we saw a 29% higher production of just over 500,000 ounces. DRD Gold delivered about 88,000 ounces of that, while the balance of just over 430,000 ounces came from Kloof, Beatrix and Driefontein. As a group, our all-in sustaining cost was just below 800,000 Rand per kilogram and largely stable year on year. And despite a 3% lower average gold price, the increased production supported a 40% increase in EBITDA to just under 2.5 billion Rand. When we look at our forecast for the balance of the year, we are forecasting a slight downturn of about 40,000 ounces at our US PGM operations, or about 6% compared to previous guidance, as a result of the ongoing impact of the safety incident experienced at Stillwater West. This reduced production output also has resulted in an increase in all-in sustaining costs, combined with a forecast higher 2E basket price, which increased taxes and royalties, means that we are now forecasting an all-in sustaining cost of between $910 and $940 per ounce, or approximately 8% higher than previous guidance. There is a corresponding reduction in capital of also between 6 and 7%. Our US recycling business remains steady, forecasting approximately 800,000 ounces for the full year. There's no change to our guidance, our production or cost guidance at our South African PGM operations, although we are forecasting a reduction of about 350 million Rand in capital, driven partially by real cost savings, as well as a delay to some of our project capital, partially required due to permit requirements that were obtained later than expected. At our South African gold operations, our production remains flat and we have not changed any guidance. However, due to higher than expected inflationary costs, particularly associated with steel and associated products, as well as electricity increases well above inflation, we are forecasting a 5% increase in all-in sustaining costs to between 815 and 840,000 Rand per kilogram. We've increased our capital outlook at our gold operations by 300 million Rand to cater for the Burnstone project capital that was approved by our board towards the end of the first quarter. Thank you very much, and I will now hand over to Charles. Thank you.
Thank you, Richard, and good afternoon and good morning to all participants on this call. It again gives me great pleasure to share our financial results for H1 2021 with you. If we start with revenue increased 63% to just under 90 billion Rand compared to the corresponding period in 2020. The improvement stems from very solid operational performance and strong commodity prices. Costs increased by 28%, period on period, and this was mainly due to the normalization of the cost base following containment measures implemented during the hard lockdown period in 2020. We also saw an increase in recycling material treated, remembering that the costs of our recycling business are directly proportionate to changes in platinum, palladium, and rhodium prices. The basket price for our recycling business averaged $3,200 per 3E ounce for H1 2021, compared with $2,200 per 3E ounce for H1 2020. We reported record adjusted EBITDA of 40.5 billion compared to 16.5 billion in H1 2020, which at the time was also a record. The 40.5 billion represents a 45% margin. Moving on to finance expenses. Net finance expenses reduced from 1.2 billion rand in H1 2020 to 640 million in H1 2021, and this was due to lower outstanding debt and higher cash balances. And following the early settlement of the 2022 bonds, we expect this number to decrease even further. Share of results of equity accounted investees after tax increased from 484 million rand to 1.4 billion rand, and this was driven mainly by the performance of Mimosa following the strong commodity prices that we experienced during H1 2021. Royalties was up fourfold to 1.6 billion rand, and mining and income tax up 4.5 times to 9 billion rand. And this was driven largely by the increase in profitability for the business. Profit for the period was 25.3 billion rand, up from 9.7 billion rand in H1 2020. And this equates to an earnings per share of 843 cents per share. Moving on to the next slide. In line with our dividend policy, we declared an interim dividend of 292 cents per share, or 35% of normalized earnings. Normalized earnings for the period was 24.4 billion rand, and this resulted in an industry-leading dividend of about 8.5 billion rand, or a yield of 10%. This slide also highlights the track record since the resumption of dividend payments in H1 2020. Since H1 2020, we have returned 19.3 billion rand in dividends. Overlay on this, the approximately 9.6 billion rand in share buybacks. This is a return of almost 30 billion rand. Turning to cash generation, the significant cash generation has continued into H1 2020. Cash generated by the operations was 39.7 billion rand. Working capital increased by 4.5 billion rand, mainly at our recycling business due to the increase in the 3E basket price, up from $2,200 per 3E ounce to $3,200 per 3E ounce. Capital expenditure was 5.6 billion rand. Royalties and taxes amounted to an eye-watering 10.3 billion rand for the half year, and I'm sure the incoming Minister of Finance and the Commissioner of Revenue Services welcomed this contribution to the fiscus. The final dividend for 2020, as well as dividends due in terms of our employee ownership plans, was paid during this reporting period and amounted to 9.7 billion rand. The deferred payment of 2.3 billion rand related to the deferred purchase consideration of the Rustenburg assets that we acquired from Anglo Platinum in 2016. During this period, we also repaid loans of 750 million rand, and the share buyback up to the end of June amounted to 750 million rand. The net result of this is that cash increased from 20 billion rand to 26 billion rand. In terms of our capital allocation framework, we continued with our strict and disciplined approach. Looking at project capital, the project setup and administration of the K4 project, Burnstone and Klipfontein started during this period, and estimated expenditure for 2021 is approximately 845 million rand. Cash reserves for H1 2021 was 26 billion rand, which is well above our targeted level of 20 billion rand. Just as a reminder, the 20 billion rand consists of a debt buffer of 15 billion rand and a cash liquidity buffer of 5 billion rand. Returns to shareholders in the form of dividends for H1 is 8.5 billion rand, which is at the top end of our dividend policy. And as highlighted earlier, dividends since the start of 2020 amount to 19.3 billion rand. We have further reduced our debt with approximately $350 million post H1 2021 through the early settlement of the 2022 bonds. And we are still on track to refinance the 2025 bonds with a $500 million issuance towards Q4. And as highlighted, this is to ensure that we have access to the debt capital markets, but also to take advantage of the low interest rate scenario. We committed when we have excess cash to consider share buybacks, and the buyback of 5% of our issued share capital started in June. The estimated quantum of the buyback is 9.6 billion rand. Lastly, and to wrap up, we will continue to allocate capital in a prudent and responsible manner to ensure value is created for all stakeholders and to ensure that the sustainability of our operations are preserved. I will now hand back to Neil, who will take us through the final part of the presentation. Thank you, Neil.
Thank you, Richard and Charles. I will now proceed with the strategic update. I think as the slide headed, our role in a greener future is on your screen, very important for us to acknowledge that we take this, our role in a greener future, very, very seriously. And I think you will see that from the next few slides. As I mentioned in the highlight section, we have done a lot of work on our ESG focus areas, and that work has resulted in us developing a sustainability strategy. And in my mind, this is a higher level of ESG commitment. These are now the actual themes and plans that will underpin our commitment to environmental, social, and governance. And I'm not going to go through this slide in detail, except to say that if you look at it, there are 4 themes. Firstly, developing a climate change resilient business. And you will see how that unfolds in the next few slides. And essentially that's based on building a green metals business. We are not going to become involved in commodities and metals that are not environmentally friendly or produced in an environmentally friendly way. And as I also said in the highlight section, our operations need to be carbon neutral, and we have a very granular plan now in terms of how we're going to get that. The second element, just to complete the themes, is entrenching long-term economic stability in the areas in where we operate, and there are underlying plans highlighted by the bullet points in that area that have underpins. Embedding human rights and ethics, absolutely critical in terms of sustainability, and you can see the focus areas there. And then of course you can only make proper decisions if you are data driven, and this data has to be granular and accurate, and of course that underpins any good business decision. But those are the key sustainability themes, and as I said, I'm really in this next part of the presentation going to focus on building a green metals business and on the road to carbon neutrality. So let's start with carbon neutrality. I personally was very pleased, and I made it very public, that the increase in generation licenses to 100 megawatts was a very important step in reforming the energy sector. I have on various occasions shared with our minister the risks associated with uncertain processes and uncertain timelines, which leads to discount factors being higher than they have to be. And I'm very pleased that these changes in licensing have reduced the time of these projects by something like 3 to 6 months, but probably in my mind, more importantly, have reduced the risk of doing this work, and therefore we can end up with much better commercial outcomes. So this was a key step in us being able to move forward. Now, on the next slide, where we talk about progress on our path to carbon neutrality, you will notice, starting on the left-hand side, that renewable energy forms our strongest decarbonisation lever, as 88% of our greenhouse gas emissions stem from electricity. So we are fortunate that we really have one area we can focus on that can make such a big difference to our carbon footprint, and that's exactly what we have done. So there are several renewable energy projects that are approved for execution within our South African operations, which contribute 97% of our Scope 2 emissions. So of that 88%, we can address 97% of that 88%. We've always had the planning in place for a renewable energy project in our gold division. As you know, we held back on that until we've had the clarity that we now have. And so that site is secured and fully permitted, and the last few processes for approval are now underway, and we expect a commercial operational date late in 2023. We have also identified 250 megawatts of South African wind energy. We have put out requests for quotes, and we are targeting a commercial operation date late in 2024. And then in our South African PGM sector, we are looking at 175 megawatts of solar energy projects, and the site permitting is now underway, and we are targeting a commercial operation date as early as 2025. Now, these projects in their own right are important in terms of reducing our carbon footprint, but as you will see, they will also be done in a way where our infrastructure for impact program will seek to maximize broad-based economic empowerment, utilize local skills and develop them, and make a positive social and economic impact in these areas. So that is a very significant step forward and should provide investors and stakeholders with some clarity around our reduction or our process to get to carbon neutral as we've promised. Let's move on now to building a green metals business, and a green metals business is essentially underpinned by our current exposure to PGMs, and currently we all know that they remove noxious gases from the air, but in the future will certainly form an instrumental role in the hydrogen economy, and hence in a much greener future, and that will be predominantly through fuel cells. Recycling, I will again highlight some information that shows the importance of recycling and the circular economy, but we do intend to leverage our existing business by growing it, looking at inventory management and unlocking logistical challenges. Tailings retreatment, our exposure to that part of the business produces the greenest metals, and in this case it's gold at the moment, but there's no reason why some of the greenest copper, PGMs, etc. can also be produced through tailings retreatment. Importantly, it cleans up the environment at the same time, so a great business to have exposure to and complements our green metals strategy. Battery metals, as you know, has been something we've been working on for at least the last 2 years, and Calibre and Sandoval make the first few steps into the space, and more specifically you can see that we are targeting the European market from a battery electric point of view, and you can expect more in that area, and I'll discuss it in a bit more detail in the next few slides. Many analysts have noticed the rising importance of uranium, and we will look forward to creating value out of our existing assets. Nuclear energy is clearly going to play a part in the future energy mix because of its carbon friendliness, and you would remember that the acquisition of Cook was predominantly based on the uranium exposure many years ago, which we have retained, and I will discuss that in more detail as well going forward. So those are essentially the building blocks that I'm now going to expand on. I don't think there's a need to talk too much about PGMs. I think, the last few years there's been a lot of focus on PGMs, what they do, the fact they are considered green metals, they are important for the environment. In terms of current uses, removing noxious gases from internal combustion engines, environmental legislation is stringent and increasing, driving higher PGM loadings, which underpin their current use. And of course, there's ongoing industrial and jewellery demand, which complements that. I think in terms of looking forward and the sustainability in terms of the use of these metals, the hydrogen economy will certainly, as I've said earlier on, underpin future demand. Platinum is clearly an effective catalyst in PEM electrolyzers and fuel cells. Iridium is the same in terms of electrolyzers, and of course ruthenium is utilized in this area as well. So I certainly have little concern around the PGMs. The one that is probably at the highest risk is palladium, and hence why we have also been driving substitution research in terms of using palladium to substitute rhodium. So the PGM fundamentals are well understood, and I really don't think I can add much to that at this stage. Just in terms of the PGM market, I think it's appropriate just to provide a very brief update. I think the market is currently quite volatile, but in terms of the medium and long term, I think the demand fundamentals are the demand and supply fundamentals are good. The supply disruptions from the first quarter of this year eased in the second quarter. Recycling, because of the elevated prices, is in our view going to increase by approximately 15% year on year. Demand recovery is certainly impacted by the Delta variant and of course chip shortages, but I think we will see a move to normality in 2022, and certainly automotive manufacturing will rebound, we believe, in 2022. Despite all of the above, the overall 3E PGM market remains in deficit in 2021, and that's really the key key message. There's a lot more granular detail that again will be presented at our investor days in September. But for the purposes of this presentation, I think the fundamentals in the longer term are robust. Just moving on to the next slide regarding recycling of PGMs. Clearly recycling is part of the circular economy, enabling multiple utilization of these very unique elements. Important to note that our US recycling business is one of the largest recyclers of PGMs from spent autocats. This is the most environmentally friendly way of producing PGMs. Through this process, we emit 6 times less tons of CO2 than from an underground operation. 63 times less water is consumed in recycling compared to underground. 90 times less waste is produced from recycling than occurs in underground mining. As such, we have decided to create a dedicated business unit, and as I said earlier on, that's reflected in the fact that we are now segmenting the recycling business accounts. The recycling business unit will be led by Justin Froneman out of the US and the existing Stillwater recycling team, which he is part of, and it'll be complemented with technical capacity from South Africa. The growth strategy that we have developed for this business will be implemented, and you will see, I hope, progress even within the next 6 months. We will use our acumen and technical capacity for process enhancements, and margin accretion are key focus areas in this business. As you can see from the diagram on the left, we understand this business well. We know where the margins are made, and certainly we look forward to building up a very substantially and larger PGM recycling business. The acquisition of Sandouville, in our mind, is also key for our entry into the European space. Just talking about tailings retreatment, DRD Gold is an investment we made, fully acknowledging the importance of this type of production of gold. And as you can see from this slide, we believe it produces the greenest gold in the industry, and it also serves in terms of removing environmental legacies, specifically in the South African gold mining space, where hundreds of hectares have been cleared for social and industrial development. Those tailings dams that remain have been vegetated, reducing dust and improving the environment. Profits from this business have been ploughed into social investment in youth education and urban farming. It's a business we really like. As we have said publicly before, we would certainly want to see it being built into other commodities, which will result in them also being green commodities produced from tailings retreatment, and we certainly back DRD to do that. Right, moving on to battery metals, as I said in the beginning, we can't lay out our exact strategy to the market because it will reduce our competitive edge. But what we can do is, as it evolves, we can share with you our thinking, which I think you will find class leading. So building on what we've said before, and remember we've been working on this for more than 2 years post the acquisition of SFA Oxford. The penetration of battery electric vehicles has accelerated, and the graph on the right hand side shows you how projections are changing. And again, I want to highlight, we don't see this as a threat to PGMs. We see this as complementary to PGMs, and you will see that as we build the building blocks of our green energy and metal strategy. The Chinese and the European markets are at the forefront, but in the not too distant future, especially with President Biden's initiatives, you will see North America following suit. And what we are noting is increasing regionalization of battery metal supply chains, and hence our need to make sure we are well positioned in Europe, and we're going to be well positioned in North America to complement those supply chains. Lithium is the key metal. We have raised that before, and I think to us it's clear that demand is going to dwarf current production volumes. So we look forward to building our lithium exposure in the sector. And that's because deficits will loom in the not too distant future without substantial supply initiatives. The cathode chemistry is moving to high nickel compositions, and hence our interest in nickel and nickel processing. We believe that's going to be instrumental, and hence the acquisition of Sandouville nickel refining facility in France. Security of responsible supply is an increasing focus area, which is a problem for cobalt. And of course, the recycling business unit we've just announced and described, it'll be their job to move into battery metal recycling as well. Once they've grown the PGM side of that business, and we see that being material from 2025, and most analysts will probably say that, but you're not going to have batteries ready for supply. There are many batteries that do not make it into production because they are faulty or suboptimal that need to be recycled. So we see sufficient supply in the not too distant future from a recycling point of view. Our initial battery metal steps I've described a few times now, and I'm not going to go through the reasons for Calibre. It's been well explained, and it's listed again on this slide. But I do want to talk a little bit about Sandouville, and of course we have many times said what we are not going to become is a contract miner for any particular party. We do intend to be involved in supply chains and build on our existing relationships with the OEMs, which are the same OEMs in the PGM space. We have announced a strategic partnership with Johnson Matthey, and that partnership is to drive more efficient use of PGMs and metals used in battery technology. So we're well placed in that area. Just a little bit on Sandouville. It's a nickel processing facility in France. The structure of the transaction may look a little bit strange, but we have a put option to acquire 100% from Eramet. And you can't conclude a transaction like this in France until the Works Council consultation process is complete, and that'll be at certainly around the end of 2021 when we will be able to exercise the put. So this is not a put option in the normal sense of the word, where you keep your options open. We have bought this facility, and we are intent on closing the transaction. It's in an absolutely prime location in the industrial heart of Europe, at Le Havre, at France's second largest industrial port, with significant logistical infrastructure. It's a polyvalent facility which is already zoned for heavy industrial purposes. We have a scalable plan for nickel, cobalt, and lithium battery grade products, and you can see the capacities that are produced. I'm not going to go through that in detail, but it also is a footprint where we can start our European recycling business. So a great acquisition which complements Calibre and certainly complements our strategic focus on Europe. So let's put the puzzle pieces together, and you can see the puzzle being built. It's a combination of the base of palladium, platinum, rhodium, iridium, and ruthenium, complemented by recycling, which predominantly now is in PGMs, but will expand into other metals. Uranium is an important building block, and I'm going to talk about uranium shortly. Tailings retreatment, if conducted in the right way, also produces green metals, and then of course the battery metals or the green energy metals are listed at the top of the puzzle. And I know that graphite is not a metal, but it's part of those suites of elements that are necessary for batteries. So that is the green metals strategy, and you can see how it's all coming together. So moving on to uranium, as I said, we see new horizons for uranium, and it is going to be a significant element in our green metals portfolio. Nuclear has emerged as a zero carbon baseload generation option, essential for global decarbonisation. I've always been a big proponent of nuclear energy. You're going to see growth, especially in the Asia Pacific region, and there's 125 gigawatts of new nuclear capacity being planned. We see the uranium market moving into deficit over 5 to 10 years, and we see long-term price forecasts exceeding $60 per pound. In terms of our own portfolio of uranium assets, we have 100 million pounds essentially of shallow and surface uranium resources at Beatrix West and Cook. Those of you who know the South African mining landscape, Beatrix West was originally Beatrix 4 Shaft, which was originally the Visor uranium mine. And not a lot of uranium mining was done there, so there's still substantial reserves that will be mined, and we will be looking to doing that. And if you complement that with Cook, which, as I said earlier, we purchased predominantly for its uranium potential, and its uranium processing infrastructure puts us in a very good place to kickstart our uranium business. And from a value perspective, we get zero value for these assets in any type of valuation. I'm very pleased to say that long-time associate and an advisor to us, Dennis Tucker, will be leading this initiative. And just in general, a comment: if you want to move an initiative forward, you have to do two things. You have to develop a strategy, and you have to put people in place to make it happen. And that's exactly what we've done with recycling and with this initiative. I want to make one last comment on Beatrix. As we know, Beatrix only has about 5 years of life as a gold production area. Moving into uranium is going to create further sustainability, which is important from a sustainability point of view as we move into uranium mining. So many benefits from this initiative, and again, you will see it evolve over the next few months. So if we talk about ongoing strategic value creation, I think you can see the strategy of pivoting into green metals through the combination of PGMs, recycling, tailings retreatment, battery metals, and uranium. We believe, first mover advantage in terms of the entire package of assets. You have, focused lithium producers, you have focused nickel producers, but you really have very few metals producers that have the combination of these metals in their business. And again, I want to say that this is not just because it's become popular. We started this process some 2 years back through the acquisition of SFA Oxford, and you can now see it evolving, and I think you will see it moving at an accelerated pace. Calibre and Sandouville are our first entries, and if you see the involvement of the sigmoid curve, you can see the green energy metals strategy unfolding in the fourth sigmoid curve. And just to confirm, the strategic focus areas of our business remain the same, and the strategy of green energy metals has been encapsulated in the segment, the orange segment of our strategic focus area pie chart, and that's building an operating portfolio of green metals and related technologies. So that complements the existing strategy. Let me briefly conclude, and I would be amiss not to express my disappointment with the valuations that we receive in the market. And again, I think this is just one aspect. I note many analysts have us at about 1x NAV. That does not concur with our NAV assessments, and of course I point four fingers back at our company for perhaps not assisting in the understanding of the waterfall graph here in terms of the segmental net asset value. Now, clearly that's a process of making sure there's a good understanding of each one of these business areas and the value they contribute, and that will be presented in the sort of detail that will assist and I hope result in analysts looking at their valuations. You can see our 2021 investor days on the 9th of September and 22nd of September. On the 9th of September, we will go into more detail on embedding ESG and the way we do business. That's the core strategic focus area. On the same day, we will do the South African gold operations. On the 22nd of September, we will focus in on the solid fundamentals of the PGM market. On the same day, we will cover the PGM operations both in South Africa and the US. So I really hope you will take the time and the opportunity to understand our company better and afford us a better rating. Just in terms of superior value creation, current and for the future, important to always look where you've come from. If you talk about improved profitability, I think we can give this a tick. Our 2013 to 2019 cumulative normalized earnings were 9.9 billion rand, or $806 million. In H1 2021, we generated 24.4 billion, or $1.68 billion of earnings. That's 85% of the 2020 full year earnings and multiples more than the preceding year. So no question about improved profitability. In terms of dividends, we can paint a very similar picture. 2013 to 2017, Cumulative dividends of 4.1 billion rand, or $327 million from our South African gold business. In H1 2021, we have declared a dividend of 8.5 billion, or $565 million and an implied 9.7% annualized dividend yield. So very significant growth in dividends. When we listed Sibanye, we had 13.5 million ounces of gold reserves in South Africa with a limited life and questionable sustainability. We've transformed this company into a substantial diversified mining and processing company with long life assets. We still have more than 10 years of life in some of our gold division. We have 30 years plus of life in our South African PGM business, and we have more than 35 years of life in our US PGM business. A huge difference in sustainability compared to when we started. I would be amiss not to note the 5% buyback of shares, and as we've always said, we will be opportunistic in terms of share buybacks, and we certainly do that because some of our shareholders believe it's important as well. Our market cap appreciation since 2013, a very significant increase in market capitalization in 8 years of 163 billion rand, or $10.8 billion. Very, very significant. And the last point on this slide is we believe we will do more of the same through advancing the complementary green metals to our current PGM portfolio. Last slide is also about making real changes to transform and create value for all stakeholders. And let's just work through this. We have restructured the Marikana empowerment structure. The previous structure was badly broken. It was non-beneficial, had a substantial debt burden. The new sustainable financing structure was a win-win from both sides, providing immediate access to distributable cash flow and ongoing transfer of real tangible value. And of course, by doing that, we secure our license to operate for these operations. And what do we mean by that? Let's move to the block on the right-hand side at the top. Just have a look at the social relief that we have provided through our BE structures and employee profit share schemes. 145 million rand was paid to the Rustenburg BE structures and 64 million to employees via a profit share scheme since the acquisition of those assets. 91 million was paid to the Marikana empowerment structures, and 521 million was paid to the Marikana Employees Trust for the 2020 year. This year it should be even greater. 294 million rand has been paid to the South African gold employees via the Tusana Trust since 2013. And then, of course, we've been able to invest in ongoing projects, K4, Klipfontein and Burnstone, which are also going to create 7,000 jobs. Let me move on to the block below that, contributing to the fiscus and social imperatives, which is critical not just in South Africa, but in the rest of the world as well. We paid royalties and taxes in this half of 2021 alone of 10.3 billion rand. We are delivering on our social and labour plans for each one of our mining licenses. We have instituted an employee voluntary contribution scheme where an employee can make a contribution and the company will back it as well. So it doubles the value of that contribution, and we look forward to growing that and ploughing that back into the communities in which we operate. And then we've made very substantial sponsorships and contributions to universities bursaries and learnership programs, and one was announced recently in the last week or so, was a 52 million rand contribution to Wits University. In terms, and last but definitely not least, is our progress on women in mining, and we have made a commitment to ensure that we have 30% of females in the workforce by 2025, and of course that will not happen unless you see that type of ratio being implemented in terms of bursaries, in terms of promotions, and you can see both of those are 30% contribution. 31% of new recruits in 2020 in South Africa were female, and very pleased to say that 31% of directors are currently female. So very serious and sincere attempts to improve the participation of women in our business. So with that, I'd like to say thank you for your time. I hope you found that interesting, and at this stage I will hand over to James to facilitate the Q&A. Thank you very much.